Welcome into this carrier update. And Donnie, gonna look what has been kind of this positive for carriers recently. Maybe see some negatives starting to pop back up. I mean, I look at this and see our ultra low sulfur diesel rack price back on the rise, and that's a concern because ultimately it drives what happens at retail locations most of the time.
It does, and you're right. But last week we talked about, during the latter part of June, July, we were really close on that split between rack and wholesale being 131, 134, 136, 138, 132. Below it starts to go up. Well, it seems like we've been kind of really close to that for quite a while, and station owners might be getting kind of a little bit more used to it or used to the volatility. A year or so ago, it was at 90 to $1, 110 mark. Right in there is where they started to push rates up. And it got real volatile during COVID, so they pushed it to about the $1.30 mark, we found out, $1.35, right around in there. Well, now we've had diesel fuel dropping for, several weeks in a row. We got down to $3.89. Over the weekend, it went up a little bit, but it's come back down. We're still at $3.89. So the difference is, if we go to the next chart, we see that our split has fallen to 121. So let's go back. We're at 389, rack price is going up, the split is 121. And either we're gonna see fuel go up this week, or we're gonna see if these station holders are just gonna kind of eat this. I mean, 121 is still a fairly good markup, but like you said, within a day, that can drop 12, 13 cents.
Yeah, I mean, we'll just pull it up. Look at how quickly it dropped from a $1.30. Well, I mean, just look.
Yeah.
What is that, 3 days? And it's gone, 10 cents in 3-4 days?
Yes.
I mean, you have to think about it from their perspective when they start selling, thousands of gallons per day. A 10-cent change in what they're making per day, per gallon, is a big difference.
It's a lot of donuts you got to sell to catch that back up.
Yeah, because, again, you rarely think of fuel as a moneymaker for these station owners, right? Typically, they mark the price to where it covers their cost and taxes. Cost meaning not just what you see the wholesale price, but also the taxes involved and the transportation and all of those things that go into fuel. They want you in the door, right? That's where they're going. But if they can make a couple pennies, it adds up over the course of a quarter.
They can't afford to get behind and be losing 8 or 10 cents a gallon either.
Correct. And that's why when you see the volatility, they're going to lean to the higher end, not be comfortable in that $1.10 range. Because if you really look, we haven't been there at all this year. We haven't even been close. The closest we were was one time in January, and that quickly reverted. Overnight.
Yeah.
So
we'll keep an eye on this and see how they react. We'll watch it tomorrow every day. We'll bring it up first thing in the morning to see, do they push prices back up, or are they getting a little bit used to it? Good question to see, but we're still below $4 a gallon. We're still in a downward trend.
Yep.
We just are not going very fast, and we'll see if it can speed back up. Let's go and look at what's going on here in spot rates. So whoever worked this weekend, y'all did a great job.
Yep.
I was worried about what was going to happen, but we peaked out here right before the 4th. This is the red line is our daily, the NTI daily. It dropped down, which eventually made our 7-day rolling average start to drop down. But they pushed it back up to 236 yesterday. Pretty good rate here. Can they hold this? I don't think so.
Yeah.
But hey, they did a great job.
Yeah.
Everybody else out there needs to try to keep their rates. You had the momentum. You need to try to keep your rates up. Everybody needs to try to keep their rates up. And this is not rates up. This looks.
It looks up.
It looks, but if you take fuel out, I believe we're around the $1.70 right now.
Yes.
But we're still at this peak at $1.70. We need to be a lot more comfortable at $1.85.
Yep.
So here, this needs to still come up 15 cents minimum.
And this is where knowing your cost per mile is as important as knowing what the rate per mile is going to be, right? Because you need to know where that break-even point is. Take fuel out of it, right? Because you're going to end up buying fuel regardless. So
Yep.
know what that rate is.
Watch your market dashboard. Find those lanes like we do and try to stay out of those markets that are weak. If everybody stays out of the markets that are weak, those markets will tighten up.
Prices go up.
Come up.
Absolutely. Well, Donnie, thank you so much for this update. We'll be sure to check on you one more time before the end of the show. Right now, we'll hand it back over to Bill and Anthony.